We are covering these 6 top big cap stocks with large percentage gains today. While watching bullish price actions, let us inform you our review on GES. GES Inc. is a global fashion brand known for designing, marketing, and distributing apparel and accessories for men, women, and children. They operate across several segments including retail, wholesale, and licensing in regions like Europe, the Americas, and Asia. Recently, there's been some big news making waves in the stock market, driving a noticeable bump in GES stock price. The latest catalyst for the surge is an acquisition proposal from WHP Global, which is offering $13 per share in cash, representing a 34% premium over GES's last closing price. The proposal has led to some positive movement in the stock as investors react to the idea of a potential buyout, even though it's still in the early stages with a special committee of independent directors reviewing the offer. This comes on top of some interesting developments for GES as they continue expanding their brand portfolio. For example, they've partnered with Signal Brands to grow their rag and bone line in the luxury accessories market. This deal taps into the growing demand for high-end handbags and leather goods, and it's expected to help the rag and bone brand expand its global footprint in the accessories world. While the company's growth prospects are solid, they did face some challenges recently, particularly in North America and Asia. GES lowered its earnings and revenue forecast for fiscal 2025 due to rising costs from currency fluctuations, freight, and taxes. Still, there's a lot of potential in the way they're expanding internationally and through acquisitions, which could continue to push their growth forward. For now, investors are reacting to the buyout proposal and the potential upside, while keeping an eye on the company's ability to navigate these external challenges. The big question will be whether this deal goes through and how it could reshape the company going forward. But in the short term, this acquisition offer has certainly put GES on the radar for anyone looking to see how this story develops. Our review on NIU Technologies, based in China, is making waves in the electric scooter and two-wheeled vehicle market. They're selling a mix of electric scooters, motorcycles, kick scooters, and e-bikes and have been seeing some pretty solid growth. In their latest quarterly report, they saw revenue jump 71% year over year, reaching about $112 million. A big chunk of that growth came from a 64.9% rise in e-scooter sales, especially within China, but international sales are also climbing at a strong pace, up 63.9%. They've been pushing hard on expanding their brand too, with more stores popping up and partnerships with major retailers like Best Buy, which has been huge for visibility in the U.S. market. But while sales are up, the company did face some margin pressure. Their gross margin fell to 12.4%, mostly because of a higher share of lower-margin kick scooters, plus rising international shipping costs and those pesky U.S. tariffs. On the bright side, they did manage to cut down on their operating loss compared to last year, so there's some good news on the cost control front. Looking forward, NIU is optimistic about 2025, with projections of a 40% to 70% increase in sales volume, which could push them to between 1.3 and 1.6 million units sold. With strong demand for their newer models and an expanding international presence, they're definitely positioning themselves for growth. Of course, the margin issues are something to keep an eye on, but overall, NIU seems to be in a strong position to continue benefiting from the growing demand for electric mobility, both at home and globally. Our review on LAZR. Luminar Technologies is carving out a significant role in the autonomous vehicle sector, focusing on high-performance LiDAR sensors that power safety and self-driving technology for a range of industries, including passenger vehicles, commercial trucks, and even robotaxis. Their recent stock surge was sparked by a test video claiming that their LiDAR tech outshines Tesla's autopilot, which has been getting a lot of attention from both retail investors and the broader market. As we head into Luminar's fourth quarter earnings report, set for March 20th, there's a mixed bag of expectations. The company is predicting moderate revenue growth compared to the third quarter, with a boost from increasing sensor sales, particularly as Volvo's EX90 continues to ramp up production. That said, their forecasted revenue for Q4 shows a 24% decline year-over-year, which is a bit concerning. Additionally, the company has raised its loss per share estimate, widening it from previous projections, which could put some pressure on the stock in the short term. But it's not all bad news. Luminar has been working hard to improve operational efficiency and has made some solid strides on that front. They've implemented cost-cutting measures and targeted a reduction in non-technical overhead costs, expecting to save around $80 million annually. These efforts are expected to improve their financial position, and the company is likely to report an improved gross loss compared to the previous quarter. Of course, those gains might be partially offset by higher interest expenses due to the company's convertible debt. Despite facing some bumps, Luminar is continuing to make significant progress on key milestones. They've been expanding their partner network, and their next-generation LiDAR tech, like the Luminar Halo, is expected to drive the mass adoption of long-range LiDAR for improved safety and autonomous capabilities. The company started delivering this new tech to select customers during the quarter, which should help boost their results. Looking ahead, Luminar is still pushing forward with major automotive programs, including the Volvo EX90, which is expected to play a key role in boosting their top-line growth. They've also been preparing for the broader adoption of their LiDAR solutions, which, if successful, could dramatically improve their revenue prospects in the years to come. While Luminar has faced some challenges like slower production ramp-ups and the inventory issues that come with it, their technology is still at the forefront of the autonomous vehicle space. The company's long-term growth story is still intact, especially as they continue to innovate and execute on strategic partnerships. Investors will be keen to see if Luminar can overcome these short-term hurdles and capitalize on the growing demand for autonomous and safety technologies, with the expectation that the coming year could see substantial growth if the market embraces their LiDAR tech as a standard for next-gen vehicles. Our review on CURR. CURRENC Group Inc. is a fintech company based in Singapore, and they're focused on making global payments easier and more accessible. Their business connects electronic wallets, remittance companies, and corporations to offer real-time payment services, especially to underserved communities. CURRENC operates in two main segments: remittance services and airtime sales. In the remittance space, they're leveraging subsidiaries like TNG, Asia, Tranglo, and GA, focusing on different parts of the payment chain. TNG and GA are more involved with retail remittance in Hong Kong, while Tranglo handles a broader remittance hub covering Southeast Asia and beyond. On the airtime side, they're dealing with international airtime transfers, particularly through Tranglo, as well as retail airtime sales in Indonesia with Walletku. Looking at the business, CURRENC has been making waves in improving financial access globally, especially in areas that often get left behind in traditional financial systems. The focus on remittance services is key, given the growing demand for faster, more affordable ways to send money across borders. Their subsidiaries seem to be positioning themselves well in key markets, with Tranglo's operations spreading across Southeast Asia and expanding globally, making them a significant player in the remittance space. The airtime segment also adds another layer to their business, tapping into a niche but essential service that complements their broader financial ecosystem. However, as with many fintech companies, there are always challenges related to competition, regulation, and market adoption. With global remittance trends growing, CURRENC could be in a solid position to ride that wave. But it's important to monitor how they handle scaling operations and whether they can maintain their competitive edge in a fast-evolving space. Investors should also pay attention to how their strategic partnerships and market expansions unfold, especially in Southeast Asia, a region with a large unbanked population that could benefit from their services. If they can keep executing well, this could be a growth story to watch. Our review on UMAC. Unusual Machines Incorporated is in the drone game, making and selling everything from drone components to fully built drones. They're behind a few key brands like Fat Shark, which is famous for its ultra-low latency FPV, first-person view, video goggles that drone pilots use to get that immersive flying experience. Then there's Rotor Riot, which is a cool e-commerce store where they sell FPV drones and gear, all catered to a community of drone enthusiasts. So basically, Fat Shark makes the parts and Rotor Riot gets them into the hands of customers. Now, if you're keeping an eye on the drone space, there's a lot of excitement around FPV drones, and that's a good thing for Unusual Machines. The FPV market has been growing, especially with drone racing gaining traction and people getting more into aerial photography. Rotor Riot, with its strong community vibe, is really tapping into that energy. They're not just selling products, they're building a culture around it. But let's not forget, the drone world is competitive. New players are always popping up with fresh ideas and better tech, and regulations around drones keep changing. Still, Unusual Machines has that cool factor with Fat Shark and Rotor Riot. The two brands together give them a unique position in the market, especially because they're not just a company selling gadgets. They're deeply connected to a passionate community of drone pilots. For investors, this could be a fun one to watch. The market for drones is definitely growing, and if Unusual Machines can keep innovating and keep that community engagement strong, there's a lot of potential here. But like any fast-moving tech company, they'll need to stay on their toes and keep ahead of the competition. If they can keep doing that, they could see some serious growth in the near future. Keep an eye on Rotor Riot's community and how it evolves. It could be a big indicator of where the company's headed. Our review on XPOF. Xponential Fitness Incorporated is a global franchisor with a diverse portfolio of boutique health and wellness brands. They're behind popular fitness concepts like Club Pilates, Cycle Bar, Stretch Lab, AKT Yoga 6, Pure Barre, and even Rumble, a boxing-inspired workout. With brands covering everything from Pilates and yoga to strength training, metabolic health, and dance cardio, they offer something for almost every fitness preference. What's really working for Xponential is their franchise model. Instead of opening all the locations themselves, they partner with franchisees, which allows them to expand quickly without bearing all the upfront costs. This model has helped them scale and grow their presence in the booming fitness industry, especially as people's health consciousness continues to rise post-pandemic. But there are challenges too. The fitness industry is competitive and trends shift fast. One brand could easily fall out of favor if it doesn't keep up with consumer demands. Plus, while expansion is key, they'll need to ensure they don't oversaturate markets. Still, Xponential strategy has proven effective so far. Their ability to tap into different fitness trends and expand through franchising gives them a lot of potential for continued growth. If they keep adapting to changing consumer needs, Xponential could see strong performance in the years ahead. Please subscribe, give the video a like, and watch more from our playlist. Thanks!